Have you ever wondered why the euro and the Australian dollar, AUD, fluctuate the way they do in global financial markets? As two of the most actively traded currencies, the euro and the Australian dollar have major implications for trade, investment, and the global economy. But what drives their value, and why do they behave the way they do? In this video, we'll explore what influences the euro and the Australian dollar, how they impact global markets, and the reasons behind their price movements. Whether you're an investor, a student of economics, or simply curious about global currencies, understanding the euro and the AUD is essential to navigating today's financial landscape. The euro, the backbone of the European Union. What is the euro? The euro, EUR, is the official currency of the European Union, used by 19 of its 27 member countries. Introduced in 1999 as a virtual currency and in 2002 as physical cash, the Eurozone includes economic powerhouses like Germany, France, and Italy. As the second most traded currency after the US dollar USD, the euro plays a central role in global finance. Key factors affecting the euro's value. Monetary policy of the European Central Bank, ECB. The ECB sets interest rates and manages the money supply. Rate cuts can weaken the euro, while hikes often strengthen it by attracting investors. Economic performance of Eurozone countries. Strong growth, low unemployment, and robust production support the euro. Economic troubles in major countries like Italy can put pressure on it. Inflation. High inflation reduces the euro's purchasing power. The ECB targets around 2% inflation. Significant deviations affect the euro's stability. Political stability and events. Elections, government crises, or trade deals can influence the euro. The Greek debt crisis and Brexit are examples of events that caused volatility. Trade balance and external factors. A positive trade balance boosts the euro. External forces like US dollar trends and geopolitical developments also affect its value. The Australian dollar, a commodity-driven currency. What is the Australian dollar? The Australian dollar, AUD, used in Australia and some Pacific nations, is the world's fifth most traded currency. Unlike the euro, it's heavily tied to commodity exports like iron ore, coal, and gold. Key factors affecting the Australian dollar's value. Commodity prices. Rising prices for key exports benefit Australia's economy and strengthen the Australian dollar. Falling prices often weaken it. Interest rates set by the Reserve Bank of Australia, RBA. Rate hikes attract investment and boost the AUD. Rate cuts usually have the opposite effect. Global risk sentiment. The AUD is risk-sensitive. It gains when markets are optimistic and tends to fall in times of global uncertainty. China's economic growth. China is Australia's biggest trading partner. Strong growth in China increases demand for Australian commodities, supporting the Australian dollar. Global trade and economic conditions. Global growth fuels commodity demand and lifts the AUD. In downturns, reduced demand hurts the currency. The euro and Australian dollar, a comparative analysis. Correlation and divergence. Although both are major currencies, different forces drive their movements. The euro reacts to internal EU dynamics, while the AUD is more tied to global commodity markets and investor sentiment. Trade relationships. The Eurozone exports a broad range of goods. Australia depends more on raw material exports. Thus, the AUD is more sensitive to commodity shifts. Global economic trends. Both benefit from global growth, but the AUD may respond more strongly due to commodity demand. Investor sentiment and safe haven assets. The euro can act as a semi-safe haven during crises. The AUD, however, typically weakens when risk aversion rises. Final words. The euro and the Australian dollar are vital to global markets, each with distinct influences. The euro reflects the health of the Eurozone and ECB policies, while the AUD is shaped by commodity trends, the RBA, and global risk sentiment. For investors and traders, understanding what moves these currencies is key. Though they're influenced by similar global themes, their different foundations lead to unique behaviors. By tracking economic data, political developments, and market sentiment, you'll gain clearer insight into both currencies and the broader economic landscape.